This is Business News coming to you live from our Rayfield studio. My name is Nisi Alan. The federal government has issued transition guidelines for the implementation of the Tax Act 2025, clarifying how taxpayers, tax authorities, and other stakeholders should manage obligations arising from the migration from the old tax regime to the new framework that took effect from January 1st, 2026. This was according to a statement issued on Thursday by the head of Information and Public Relations Unit at the Federal Ministry of Finance, Efe Owapori. According to the ministry, the document provides direction on the treatment of tax liabilities, assessments, audits, investigations, disputes, and enforcement actions relating to periods before and after the commencement of the new tax laws. The ministry explained that the Tax Act 2025, comprising the Nigeria Revenue Service Establishment Act, the Nigeria Tax Act, the Nigeria Tax Administration Act, and the Joint Revenue Board Establishment Act, would apply from their respective commencement dates as stipulated in the laws. It noted that tax liabilities, assessments, audits, investigation, disputes, and enforcement actions relating to periods before the commencement date would continue to be treated under the repealed tax laws. The guidelines further stated that tax returns relating to accounting periods ending before January 1st, 2026 would be filed under the old tax laws, while returns due from January 1st, 2026 onward would be administered under the new framework. The ministry added that the document also covers the treatment of income taxes, transaction taxes, development levies, tax incentives, exemptions, record-keeping obligations, and transactions spanning both tax regimes. It stated that tax incentives and exemptions granted under repealed laws would remain valid until their expiration date. However, it added that new applications and pending requests for incentives would be considered under the provisions of the Tax Act 2025. Petrol and diesel prices have started to decline as global crude oil prices retreat following the de-escalation of tensions in the Middle East. The reductions, led by following the drop in crude oil prices from a high of $120 per barrel during the United States-Iran conflict to about $78 after a peace deal was reached on Sunday, the Dangote refinery reduced its petrol gantry price from 75 naira per litre. The refinery had raised the price from 830 naira to 1,300 naira per litre during the crisis. The refinery also reduced the prices of diesel and aviation fuel by 100 naira per litre each, citing the easing of tensions in the Middle East. However, many Nigerians argue that the reductions did not reflect the sharp decline in crude oil prices. Speaking in an interview, Ipman spokesman Chinedu Ukadike said the refinery understands the implications of a sudden price crash on fuel marketers. As crude prices continued to fall following the peace agreements between the United States and Iran, the Dangote Petroleum Refinery cut its petrol gantry price from 75 naira per litre from 1,250 naira to 1,175 naira. The reduction prompted some private depot operators to lower their prices to around 1,180 naira per litre on Tuesday, according to petroleumprice.ng. Efforts to curb illicit tobacco trade and strengthen Nigeria's business environment received a boost on Thursday as the Nigeria Customs Service and British American Tobacco Nigeria signed a memorandum of understanding aimed at deepening collaboration in the fight against smuggling, enhancing regulatory compliance, and protecting legitimate investments. A statement from the partners explained that the agreement, signed at the headquarters of the NCS in Abuja, marks a milestone in the relationship